basic pre-call things in terms of sound, etc. The main thing is to make sure that you actually get people engaged in the webinar as well. So put your hand up, etc. But make sure you've got your phones off as well. And also make sure you've got a pen and paper or a notebook. And this afternoon, I sent out a link to everyone with the workbook as well. So I put a link there in the window. So it's tiny.cc/finance1. So that's where you'll actually find the workbook. If you have a pen and paper and the workbook printed out with you, you get a lot more out of tonight as well. So just make sure you got your phones off because it is distracting. What I'll also do too on the call is just make sure I mute everyone. It just gives us a better sound quality for everyone to hear better as well. So with that in mind, I might actually start the webinar now. So welcome everyone. We're ready to go now. Roland, are you there on the call?
I am indeed. Yes. So great. And welcome to everybody. Yes, please go and get that worksheet if you haven't got it already. So just go to that link, and then you'll see that's the resources page. And the last of the 4 links there is the PDF of the worksheet, and get that and print it out so you can walk through the worksheets as we're going through the webinar. You'll get a lot more value out of it. So, look, a general comment. It's been proven, time and time again that passively sitting and listening to someone talking just means that you're going to forget 90% of what you've heard in less than a week. So, if you want to get as much return on investment of your time in being part of this workshop, you need to participate, and that means that you need to do the exercise, and especially that you need to work through the worksheets and fill in the stuff as you're going along. Ask questions, pipe up, share your thoughts via the comment window on the right there, and we'll interact with those comments as much as possible, and the more interaction the better for everyone. And also, look, if you're going to get distracted by Facebook or LinkedIn or Twitter or email or text messages or etc., turn it off. Really, don't think you can multitask and do Facebook at the same time as listening in and taking part in this webinar. Multitasking is actually a myth, believe me, even for women.
Thanks, Roland, for that. Look, let's tell everyone on the call, I guess, the purpose of the Simple Steps for Business program, what it's all about, I guess.
Yeah. So, look, the Simple Steps for Business program is a comprehensive business coaching and development program, and it's designed to support business owners who want to build remarkable, fun businesses, solid, healthy businesses that make money, that are built to last, that are great places to work in, and to do so in simple steps. And the program is therefore based on 2 key principles, and they are small steps consistently taken lead to big change. And the second principle is every small business is as unique as its owners. And so we're Ronald Hennekrut and Kim Heffernan, and we've created the Simple Steps program to support small business owners who want to build remarkable, fun businesses in simple steps, one step at a time. And so we'll just give you a quick bit of background about us. Kim, tell us who you are.
Just in one sentence, Roland. It might be a little hard for me, but basically I'm a marketing consultant. I run a small marketing agency, many years experience across large and small business, and my company is called the Marketing Strategy Company. And Roland, what about fantastic.
You? I don't think I can do myself in one sentence. So I'm a business coach, and I help small business owners make more money, find more time, and above all, I help my clients have more fun in their business, because if you're having fun in your business, it means that everything's working. It means that you're making money and staff are engaged and all that sort of good stuff. So, and I'm also the author of 3 business books for small business owners, the 10 Truths for Business Owners series. And the second book in the series, the 10 Truths for Building a Great Growth Company, is the foundation of the Simple Steps for Business program. And we're both based in Sydney.
Excellent. So that's a bit of background on both of us, but let's jump into tonight. What's tonight all about? Well, tonight's introductory webinar is about financial management. Going back to the basics. The first steps, in other words, the sound financial management of your business. So what's the purpose of tonight's webinar, Roland?
Well, we want to achieve 2 things tonight. We want all of you to walk away enthusiastically and with at least one simple step that you're committed to taking to take you one step closer to becoming a great financial manager of your business. And we want you to understand, the second thing we want to get out of tonight, we want to give you an understanding of how the Simple Steps program can benefit you and be clear, and we want you to be clear about whether the program's for you now or later or not at all. So this is what we're going to go through tonight. We're going to check in where you are. We're going to have three principles. The three principles of financial management is what we're going to talk about. We're going to give you some tools and resources. We're going to read you a business bedtime story. Then we're going to go through a brief explanation of what the Simple Steps program is about and how it works. And then we will encourage you to get into action, to take action. Sounds good, Kim?
It sounds pretty good to me. A pretty full agenda, as usual, in our workshops. So let's get stuck into it, eh?
Indeed. So first we thought we'd like to know what some of you guys want to gain from being on the call tonight. So you've heard us state what our outcome for this webinar is, and what we'd like you to do is to write down what you want to achieve tonight in a short sentence and type it into the comments box on the right of your screen. Remember, our outcomes that we want you to get to enthusiastically walk away with at least one simple step that you're committed to taking around financial management, and that you understand, that you have a better understanding of what the Simple Steps program is about. What is your outcome? What do you want to get from today? So type it into to any feedback, comments, type into the little message window on the right, and then we'll pick it up from there.
Okay, we've got a couple of people. I can see a couple came out. Just give it a minute or so, Roland. Okay, here's the first one. We've got John. John's outcome is to get a better understanding of how to measure cash flow.
Yeah, well, look, that's definitely one of the topics we're going to talk about today. So I feel confident in saying, John, that you'll definitely get a better understanding of that.
Excellent. And we've got another volunteer, Carla. Carla tells us she wants to understand how the Simple Steps program can support her.
Yeah, well, so glad you asked. Well, look, that's absolutely part of what we plan to help you get clear about, and we'll at the end of the webinar we'll spend a few minutes on that specifically. That's great.
Well, how can people actually ensure they get what they came for on the call? Because I mean, a lot of people listen to webinars and education, but they really need to, how can they get what they come for?
Well, I suppose that's the reason we ask you the question, to focus clearly on what it is that you want to take away from this webinar today. And what we want you to do is to keep that in the forefront of your mind. Because, you know, ultimately, you have to take responsibility for achieving those outcomes. We can't do that for you. So you've got to ask yourself, if that's what I want to get out of this today, how do I have to sit here? In what frame of mind? How do I have to behave? Does it mean I've got to sit back and listen and just check things out, or maybe it means I have to get really assertive and ask lots of questions, or work out how you have to be on the call and what it is that you need to do to get what you came for.
Excellent. Hey, Ron, why don't we actually check in how everyone feels about financial management, just to get them focused on that. We'll just do a little quick poll.
Perfect. Okay. So the questions that we put up, that Kim has put up there, is say, when I think of financial, you think of financial management, I feel frustrated, guilty, slack, because I know I should be on top of my numbers and my cash, but I'm not. Or I feel overwhelmed because I just don't know what is most important, or bored because I hate numbers and I want anything to do with them, or excited because I love numbers and dollars, and thinking about the numbers gets me all riled up.
For all those accountants on the call, huh? Okay.
Yeah. As an accountant of our acquaintance, of who we know, says, accountants aren't boring people. We just get excited about boring things.
Okay, yeah. It looks as though we've got some numbers coming in, so I'll close the poll off, and let's just see what we've got here. Okay, it looks as though most people scored A and B, no one scored C, and one person scored D. Is that what you'd expect, Roland?
Yeah, look, that's how it is for most small business owners, because they've, and most small business owners do feel a bit frustrated and guilty and inadequate about it because they all know that they should look at their numbers more, but they just don't.
So why is that a problem? I guess you can hire someone to do that for you, I guess, can't you?
Well, look, the problem is like this. Most business owners know that they should manage the numbers because they have been told so by lots of people, including their accountant as well as everybody else. And hence they feel guilty and somehow inadequate as business owners.
Okay.
And quite apart from that, the problem is that everyone is actually right. So you simply cannot build a healthy, sustainable business without being on top of the numbers all the time. Being on top of the numbers will mean the difference between success and failure. Obviously, that situation just isn't, going to lead to great outcomes for people if that's how it hangs together, all right? So that's the purpose of this call. How can we take the first steps to get on top of the numbers? What do we need to know, and what simple steps can we take? And so what we want to do in this webinar is to give you some of the basic bits of understanding and direct you to a few simple tools that you'll find really helpful in building your healthy business. And we're going to suggest some simple steps, actions for you to take straight away.
So I guess, Roland, what you're really saying there is you don't actually have to know how to do numbers, but you need to be on top of them. You can delegate the doing part of it, but you need to understand the key principles. I guess that's what we're going to talk about tonight.
Exactly. That's right. That's exactly right. And Kim, I'm just interrupting for a second because I don't know if this is like what it's like on everybody else's screen, but on my screen I've just got the basic organizer screen, the welcome screen to the 3 keys that you need for sound financial management. I haven't got any of the slides or anything up at the moment.
Okay, just let me...
seem to have lost it, so I just better let you know.
Thank you for that. Let me know that.
Yeah, I don't know if it's me or you, but if it's like that for anybody else.
Okay, we'll get that back.
If something happens, no, I've just got the computer.
Okay.
Desktop.
Okay, just bear with me. Okay.
Yeah.
So that's where we should be.
I think that's right.
Yep.
Yeah. Good. So, all right. So let's get on to our 3 principles. 3 principles that we're going to talk about today. And they're the 3 basis principles of financial management. And the principles are, number 1, the functions of profit. 2, what is the difference between cash and profit? And which of those, number 3, which of those ones should we focus on most?
Okay, the functions of profit, I mean, tell us more about that, because I would have said that profit's the reason the business exists. Isn't that so?
Well, yeah, see, a lot of people think that. That's actually not the case. See, profit has a really important set of functions in a business, but it isn't the purpose of the business. It's true that the business can't exist without profit, and as such, it's the enabler. So the function of profit is to help the business achieve its purpose, and so there's 3 functions of profit, and all of them are crucial. And function number 1 is to pay investors and stakeholders in a business a return on the money that they've invested. And function number 2 is to provide the business with funds to invest in itself in order to grow and to develop the business. And function number 3, it's the thing by which we measure how well we're doing in running the business.
Okay. Okay, well, so that's great, that's 3 functions, but what do you actually mean by return on investment?
Well, okay, so that first function, return on investment, is relatively easy to explain and understand. Look, if someone, like the owner or anyone else, decides to invest money or time, for that matter, into a business, they'll want to get some return for that investment. After all, if they deposited that same amount of money in a bank account, they would be paid an interest rate by the bank. And if they'd bought some shares, they'd be expecting a dividend as well as a possible capital growth in return. So investing in a business needs to have a return associated with it as well. And what is more, investing in a small business is actually much more risky, generally speaking, than putting your money into a bank or buying A-grade shares. So there's a great losing money, and hence the potential return should be greater as well. This might seem, this might seem like an obvious sort of principle, but many business owners actually don't take that principle on board at all. Many business owners just don't pay themselves, don't even pay themselves a more or less regular wage for their efforts, and they don't think about a return for their investment of money or time or both at all. And so for that reason, I actually often encourage my clients to start by paying themselves a regular weekly, monthly wage, drawing, whatever you want to call it, of some sort, just to get some realism into the business.
So is that wrong because they think about the business as something they do rather than the investment? Is that really what you're saying?
Yeah, that it's the old thing that Michael Gerber in E-Myth says. Most business owners have bought themselves a job and they're working for an idiot.
Sack the boss.
Yeah, it's that same thing. We think that we've got this there's lots of weird twisted stuff going on in our head around that. But
yeah,
when you are a business owner, you really need to take some serious business decisions, and one of them means that you have to pay the person who runs the business a reasonable wage for the time that they spend on the business. And if that happens to be you, there's no reason why you shouldn't be paid a reasonable wage. That doesn't mean that you have to be paid $500,000.
Yeah,
but you have to be paid something reasonable, and then you start to think more realistically about the business. So that's the
principle. Yeah, well, that makes a lot of sense, I guess. Well, what about the second function, like investing in itself? What do you mean by that?
Well, a business that wants to grow and develop needs so. Even a shitty business that doesn't grow, needs some free money that's unencumbered to replace equipment, for example. So when a business grows or changes, there'll always be need to invest in new equipment or machinery or computers or kitchen equipment or vehicles or premises, you name it. And also when a business grows, there will nearly always be a higher demand on readily available cash. More about that, we'll talk about that further on down the track, and John wanted to know about cash flow. We will be talking about that. But, the business may need to invest in employing and training new staff. And for all of those things, you need money. And the cheapest and most readily available money to invest is money that your business has made in profit.
Yeah, okay, I see. So if you wanted to buy like a new vehicle, you'd go and get a lease or a loan, wouldn't you?
Well, yeah, sure. That's true. You can do that. But in effect, that is essentially using your profit as well. It's just that you're pulling money out of future profits. So you're borrowing money against the profits you're going to make next year. So it all comes down to the same thing. So you either excess money to invest in growing and developing your business now, or you borrow money from future profits to do the same thing. So that one way or another, you have to have profit available to do so.
Yeah, because there's always a million more things you can buy or do in the business, isn't it? Then you've got funds available to do, and I've seen it so often with people going out and buying pretty red cars like the one we can see on screen there. It's actually not reinvesting in the business; it's a toy.
No. Yeah. That's not. Yeah, that's a totally different. Use of profit again, of course. If
Absolutely.
You've got money to available, great, but that's play money.
Exactly. Well, if they are the first two basics, now what about that third one, the measuring the success of the business, if you like?
Yeah. Look, that's the one that a lot of people miss. You see, we need to keep our eye on the ball when we run our businesses. Business coaches are nearly always fans of sporting analogies, and I try and avoid them personally, but I do like to think of business as a game of sport. a game of soccer or basketball or cricket, like a cricket scoreboard that's up there, or whatever, team sport. And when we play a team sport, we want to have fun, and especially we want to win. And the only way to know if we're winning at any one moment, especially when you're playing cricket, because you've got no way of knowing what's going on there, is having a look at the scoreboard. The scoreboard tells us whether we are winning or losing.
Yeah.
And how we are playing the game. And that's exactly how we should think about profit. It's the most accurate and simplest measure we have to keep score and to know whether we are winning or losing the game that we're playing, the game of business. And there are many other important measures, and we shall talk about another crucial driver of the health of your business a little bit further on. But profit is ultimately the key number to keep an eye on. If you are making profit before tax, after expenses, etc., moving ahead, and if you're not making profit, going backwards. It's as simple as that.
Okay. Well, I think I get that actually now. That's made it a lot clearer. But that was the first principle, I guess. We've got a couple of resources available as well. If you just look at the link that's going up on the screen there now, that'll actually help you. There's a great article about profit from the Times 100. And something else on a special resources page we set up as well. So have a look at that resources page. There's a whole lot of resources there that we'll go through later on and as we go through the webinar. Is that right, Roland?
Yeah, absolutely. So tiny.cc/finance step 1, number 1 at the end. Tiny.cc finance step 1 is the special resources page for this webinar, and all the resources will be on there, are on there already.
Cool. So I guess they're the three functions of profit, return on investment, or ROI as it's sometimes called, to invest in the business, and lastly to know if you're winning or losing the game, keeping a score.
Yep.
So let's have a chat about the second principle, Roland, this difference between cash and profit. And I've seen this so often. Many business owners treat them as one and the same, but there's no way they are, is there?
No, it's most people do confuse the two, and often they do so to their cost, because profit and cash are not the same thing at all. And although there is a relationship between them, in most instances that relation is actually very loose and very distant. And the confusion that arises that for most business owners is that people don't appreciate that in most business transactions there is a factor that has a significant impact and that can't be seen in a simple income and expense calculation, and that factor is time. Einstein called it the fourth dimension. In finance, it's the second dimension, time. Time has a major impact on the health of your business through this thing called payment terms.
Yeah.
So, where profit is a simple calculation of the price you pay, profit is a simple calculation of the price you sell something for minus the cost of the goods and the overheads of your business. The mistake people make is to think that just because you've made a profit, it means it must be in your bank account and vice versa. Because you have money in your bank account, it must mean that you made it. Well, unless you have a really, really simple business in which all transactions take place in cash, on the day, and COD, the connection between your bank account and your profit is a really loose one.
Well, but how do you mean? I mean, if I sell you something for $100 that cost me $50 to make it in the first place, $100 less $50, I've made $50 left over, and that amount is the same as my profit.
Yep, that is true, but that only works in that super simplified example, because if you had to pay for the raw materials of that thing and for the labor to make that thing last month, and if you have to pay for your office rent every month in advance, and if in turn when you sell me that thing you give me an invoice, and then we make an agreement you want to be paid on 30-day trading terms, and then I'm tardy in paying you so that you don't see my money for another 45 days, for example, you've been short $50 cash for 2 to 3 months. And before you see the profit in your bank account, and by that, before you see the profit in your bank account, it's been 2 or 3 months.
Yeah, okay.
But by that stage, you will have already forked out for more labor for 2 more months, and more labor and more money for office rent, and you've bought more raw materials for the next things that you're making, so that even when you get paid by me, you're still in the red in your bank account in the first place.
So really, I guess what you're saying is that you can be making a profit and still be in red in your bank account.
Oh, absolutely, and it happens all the time. And as a matter of fact, for reasons that are way too complicated to go into in this webinar, but when your business is growing, the problem becomes exacerbated, and many profitable growing businesses have gone out of business because they ran out of cash.
Yeah, so it wasn't because they weren't making a profit, because they ran out of cash. No. Well, but if that's the case, then what's the answer to that dilemma?
Well, it goes like this: you've got to you have to measure cash in a different way than you measure profit. Cash has to be measured in terms of its flow. So imagine a river. If you had a river flowing through your property and I asked you to tell me how much water was in that river on your property, you couldn't answer it, because how do you measure something that's flowing like a river?
Yeah, okay.
And cash flows like a river too. And so what you need to measure is how much money flows into your account in a given time period, say a week or a month or whatever, and then how much money flows out of your account in that same time period. And if the money that flowed in that week, for example, was more than the money that flowed out in that week, you're cash flow positive. And if the money that flows out is bigger than the money that flowed in that week, you're cash flow negative.
Okay, so it's not like an absolute number, like a profit figure. It's what goes in less what goes out to say whether you're positive or negative, I guess.
Yes, but it's in that time period. The time period is what's critical, and that's that extra dimension that you've got to take.
The sand through the hourglass, like we had before, basically the time.
Yeah, exactly. Yeah.
Okay, so that's the second principle, I guess, that difference between cash and profit. And of course, we've got another resource available on the resources page for that as well. Just put that up on screen again, just for people to see that. And it's actually a cash flow forecasting spreadsheet from, I think it's from ANZ, was that right?
Yeah, Australian Bank ANZ put this one up on their website, and it's freely available, so yeah.
And so that's a good resource for people to actually use.
Yep.
So I guess that's the first two principles, which leads us to the third principle we outlined at the top of the webinar. Which of the two, cash and profit, we should be the most focused on? Like in principle one, you seem to be saying that profit is most important, and that's what we should be doing in our business. Is that right? That's the main indicator we should use?
Well, yes. Look, I did say that, didn't I? But now I'm about to confuse you again, because what I'm about to say now is going to contradict that statement in a way. So let's go back to my sporting analogy of playing a team sport and how we know we're winning the game or not. So profit is the big score on the scoreboard of business. If we make profit, we win, and if we lose, straightforward. But while playing the game, we have to be really focused on a few other things as well. And the best example of that would be, say, the teams need to ensure it gets enough fluid, enough water to drink. They need to drink water all through the game to be able to finish the game, or they'll dehydrate and they won't be able to finish the game. So as the coach of the team, you need to make sure that all your players have enough water available so they can function. Because cash is like the water for your business. In order to win the game, you have to ensure that there is plenty of water for your business to so that it can keep playing the game and play it to the best of its abilities. So it means that on a day-to-day basis, your primary focus must be on ensuring that your cash flow is adequate for your needs. Cash determines if you can pay your bills on time and if you can take advantage of opportunities that arise. And if you can't really pay your bills, you can't function, and if you can't develop, and then you can't develop and play to the best of your abilities. If an opportunity comes your way, if you have cash available, you can invest in a new machine or invest in rebranding your business or a marketing opportunity that will allow your business to grow or make more profit or whatever. You need to have the ability to pay for that, and if you don't, the opportunity will pass you by. So how much profit you've made last week, month or year is irrelevant if you haven't got the ability to pay. So cash is therefore the first enabler in a way. It enables you to do the business in the best way you can so that you can make profit and win the game.
Okay, now I get it. Actually, I might just take a moment, Roland, just to make sure everyone's using their worksheets. We're on page 4 there, and we've got profit is the blank enabler. You called it the first enabler, didn't you, Roland?
Yes. Yep. Correct.
So
the next one is profit is the final enabler.
Yeah, so profit's the final enabler, as we said before, because it enables you to achieve the greater purpose of the business. And by the way, we go into a lot more depth about purpose in the first topic of the Simple Steps program.
Yeah, and that's right. Yeah. So cash makes profit possible, and profit makes the purpose possible. So in theory, you could actually continue to trade in a business forever as long as you have inexhaustible cash reserves. In practice, of course, if you don't generate profits along the way, at some point the cash will run out at some stage. So the third principle is that the day-to-day focus of a business owner, as well as the cat, must be on cash, and the longer-term focus must be on profit.
Okay, that makes sense now. That tells me how they should link together. I'm just going to ask, has anyone got any questions at that stage? No, there's none come in. They're all understanding it, which is fantastic. I think, Roland, these kind of people being patient, studious, it's probably about time we reward them with a business bedtime story. What do you think?
Yes, I think so. Business bedtime stories are good value, and these people have definitely deserved a business bedtime story out of the Simple Steps program now. So tonight we have the story of Amanda. Once upon a time, a long, long time ago, in a country not unlike Australia, Amanda owned a small boutique in the inner city. Amanda's hotel relied for a significant percentage of its annual revenue on 5 different corporate accounts. The room rates that Amanda charged these customers was fairly heavily discounted, and payment arrangements varied widely between the 5 accounts. Some bills were settled on the spot, and others would be settled on payment terms of up to 90 days in one case. Yes, exactly. Big no-no. Amanda struggled to pay her bills and wages most months, even though her occupancy rates were very high. Clearly, something wasn't stacking up. The obvious conclusion might have been that her costs were too high or that her rates were too low, but Amanda knew that her rates were in line with similar properties in the city, and she managed her costs very tightly. So if it's neither our prices nor my costs that I can do anything about, what else is open to me? Thought Amanda, week in, week out, and Amanda was going grey. Working with me as a business coach, Amanda came to appreciate the difference between profit and cash, and she realized that she needed to give equal attention to both of these. Amanda also came to have a better appreciation of her break-even point. It was time for Amanda to set up proper controls for both financial factors and to set in place a series of minimum break-even points below which it would simply not be possible for her to go. And she did. Amanda developed a series of financial reports that showed her that the reasons for her monthly cash shortage was that all her profit and working capital was tied up in corporate accounts that were paid over 30 to 90 days. And Amanda also worked out what the minimum room rate was that she could ever charge if the bill was settled on the spot. And rooms that were paid for at 30, 60 or 90 days needed to attract significantly higher rates again. Armed with this knowledge, Amanda was able to negotiate better terms with she stuck and said the business of this company. In a matter of 4 months, things started to turn around, and Amanda's bank account looked healthier than it had in years. Amanda actually gained 2 new corporate accounts, both of which now settle their bills weekly with a corporate account, further adding to the health of the business. And Amanda and her staff can now focus on what they do really well, and that is making their guests feel at home. And Amanda, as well as Amanda's staff, will be happily ever after the end.
Ah, such a romantic story, Roland.
I know. I'm going to talk to you about, don't I?
Seriously though, there is a message in there that's clear as always. You need to focus on the numbers. You need to, I guess, understand that difference between profit and cash. I mean, yeah, the 90 days was obviously killing it. And you need to focus on the cash flow. And it's interesting, the saying no, it's really the most underrated business management tool, isn't it?
Yeah, that's right. So we really would love to hear what popped into your head during Amanda's bedtime story. Please type in your comments or questions in the message box.
So while we actually wait for those comments to come back, Ron, how about we sum up everything we've talked about so far in the webinar? Those principles we talked about.
Yep. So the three principles we talked about is that the first is that the business can't function without profit. Second, that profit and cash are not the same thing at all. And on a daily, weekly, monthly basis, your focus should be on cash first and profit second. And the other big insights that came from Amanda and her hotel is if you don't get paid on reasonable terms, you can't run your business full stop. Second is you have to know what your break-even point is. And third, sometimes it's better to say no to the business than to continue doing business that costs you money.
Yeah, because there's no point in doing business with things that aren't making you money, is there?
No. It's a complete, you're better off fishing.
Okay, so we've got a couple of bits of feedback here that come up for people. One is from Jackie. Jackie is saying she'd love to meet Amanda. Saying no to a big corporate account must have taken a lot of guts.
Yeah. Look, Jackie, that's true. Amanda is a gutsy woman. She still is. But saying no actually was one of the first steps that changed her business around 180 degrees.
Yeah, and another comment comes from our mate John. Oh, yeah, we sort of skipped over that a bit. What do you mean by break-even rate that we referred to in the story?
Yes, good question, John. I was hoping we could get past that one without.
Almost got away with it.
Look, the break-even rate. The break-even rate really. Now we really tell you that's impossible, but I certainly suggest that you ask your accountant about that break-even point and the way to calculate it, and assist you with that. But the idea is this, the basic idea is this. What is the minimum rate that you can charge per hour or per room or per brick or the minimum you need to invoice per week to give you enough income to pay for your fixed costs, your overheads in other words, such as your rent, your wages. So sometimes it's referred to what it costs me to turn on the lights. What does it cost you every week to turn on the lights without buying any raw materials or anything like that? What does it cost you to turn on your lights? That's your that's your break-even point. And look, it's a great question, John, and we do go into a lot more detail about the break-even point in the full program, of course, but I hope that's just gave you the basic idea.
So really, Roland, if you're not ahead of that break-even point, you're going backwards. That's really what you're saying.
Yeah, that's
absolutely.
Right. Yeah. Every week you need to earn a certain amount of money just to pay for the overhead.
Yeah, okay. Well, I guess that's really good going through that and doing that summary. I guess what I'd like to do now, if it's okay with everyone, is just take a couple of minutes to tell you about the Simple Steps program, why we're so passionate about it, why it matters to us, and why we believe it should matter to you as well.
Yes. Yeah, that's good. So you've heard us say before that the Simple Steps for Business program that rests on two principles, right? It's just the small steps consistently taken lead to big change. And the second principle is that every small business is as unique as its owner. And why should you care about that? Why would anybody care about the purpose and the principles of the Simple Steps for Business program?
Well, I guess why, because tonight we've just scratched the surface of sound financial management, the very first steps in that, and really sound financial management is only one of the 12 key areas you need to master to create that successful, sustainable business, or what we like to call a remarkable fun business, I guess.
Yeah. Yeah, and what we call a remarkable fun business is one that you don't get to feel tied to. It's a business that you love because you're clear on where you are and where you're going and why, and so it makes you feel proud of what you're creating. Second, it's a business that makes money. You communicate what you do to your market better than anyone else, and because of that, you can charge a good price and make a good margin. It makes you feel secure because it provides the money you need. And thirdly, it's a business that gives you the time to do the things you want to do. You have systems and processes in place. So you have your finger on the pulse, and your staff and you are able to attract, lead, and motivate. So it gives you the freedom to spend time on family or friends or hobbies or whatever you want to do.
But true enough, Ron, but as we both know, and I guess as most business owners know, there's a real difference between being a great butcher, a great baker, or a great candlestick maker than running a business.
Yeah, and I know some pretty good butchers. Let's explain. But let's explain to the audience how Simple Steps program helps great butchers and bakers and candlestick makers to become great business owners.
Okay, so what we've actually done is put together a program that every month we take you through one of those 12 key topics. So it's actually taking on the board the principle of simple steps. These are the 12 topics that affect all business owners who want to develop their business, and we really delve in deep into those topics. So each month there's a video episode which covers the key points. There's resources so you can actually get started in mastering that topic. You work through a workbook to help you take your first simple steps. We've got case histories or business bedtime stories like you've heard tonight. And there's action steps with accountability tied to it. Because sometimes we get busy doing things and don't always do the action steps we need to do. And then finally, at the end of each month, there's an online workshop where we actually tie the whole thing together, where we also have some guest interviews so you can actually learn from experts and business people who've done these topics in their own business. And finally, Roland, there's a copy of your book, which really brings it all together.
Yeah, look, and I'm really excited about the difference this program can make in a business, to a business and a business owner. So, shall we? Let's just go quickly through the different areas we cover in the program, and that'll give you guys a better understanding of how we go about helping you create your own remarkable fun.
That's a great idea. Well, I think we've broken up into 3 key areas, haven't we?
Yep. Yeah, so we said there's 12 topics, and they split roughly in 3 areas. And the first area is vision and planning, and obviously this is the strategy area. Where do you want to go? Why do you want to go there? And how are you going to get there? That's their first area. And then the second area focuses on revenue and money. How do we earn the money we need, and how do we manage the money we earn? And the modules are the market, customers, sales, and financial management. And look, these are actually the topics that typically scare most small business owners the most, because they don't feel they know enough about it, and they are confused about the basic principles. And these 4 modules are designed to help you feel more comfortable and to help you gain mastery over these 4 areas for your business.
Which brings us to the third and final main area of the program, time.
Yes, the final area, yes, time. The final area focuses on time, and the thing that we can never get more of, and the thing most small business owners are always short of. When you gain control over time with the help of these 4 modules, the business will start to work for you instead of you working for it. And the 4 modules that will support you taking control of your time are keeping your finger on the pulse, systems and innovation, people, and leadership. And don't forget, there's a video and a chapter of the workbook, a chapter in the book, a real-world case history, interview with an expert, online workshop, bunch of resources, fortnightly tips to support you in gaining mastery of these 12 topics for you and your business.
It is simple steps, but we do cover a lot in the program, don't we, Roland?
It's not lightweight. It's not for the faint-hearted. It's aimed at business owners who take a long-term view and are committed to their business and passionate to their business. We can't change the world or your business overnight. As we said before, we believe in small steps consistently taken lead to big change. So the program is spread out over a year, one topic per month, and if you allow around an hour per week for this vital work of the business owner, your life as a business owner will never be the same again. Guaranteed.
So how about we tell them what everyone's waiting for, I guess, Ron? What is the investment in the program?
Yes, drum roll. It's $127 per month for 12 months, including GST, automatic debit, and plus your own commitment. And yeah.
Well, I guess I personally think it's a pretty good investment for $127 a month, but then again, I'm probably a little biased, I guess. But some of you probably might be thinking, yeah, I know I need to spend an hour per week developing and growing the business, but yeah, what's the best way to spend the hour? Or you might think this program sounds great, but gee, what if I get stuck? Or, I might think $127 a month sounds like a steal, but it still actually adds up the real money. Is it a really good investment? Like, in other words, you've got to do something like this, but you're still a bit unsure.
Indeed. Well, especially for you, we have a special offer, don't we, Kim?
Well, yeah, without sounding too like here's a set of steak knives, like on top of all the stuff that we've already included, we actually want to make sure people don't sit on the fence. So we've got two more things which really make that decision a no-brainer as far as we're concerned. Number one is we want to make sure you succeed, so you get unlimited email support for online for the full 12 months. And finally,
so if you do get stuck, we will be supporting you. Absolutely.
And finally, for some people, $127 a month is a steal. For some people, it is an investment. So we want to make sure, and we're putting our money where our mouth is, I guess, we've got what I call a 10 times guarantee. Is that right, Roland?
Yep, you do. Our promise is that if you follow the program, you commit to the time, you take part fully, and you complete the exercises, we promise that the value you will get from this program will be at least 10 times your investment, your total investment. 10 times. And if you don't get that 10 times return on your investment, we will personally refund your money. 100%, full stop.
Well, I guess if that doesn't make it a no-brainer, I don't know what is. So thanks for taking the time out to listen to us. That really is what the Simple Steps program is all about. And if you know Roland and I, and you've read some of this, if you know we're passionate about this, about helping people and making sure people get results. So that's why we give the guarantee and we put the program together. So for that $127 a month, you can start to build mastery of those 12 key areas, not just sound financial management we talked about today, but of course, as always, in simple steps. That's the basic principle. So the best thing to do right now, if you want to have more fun, more money, more time in your business, is to go to the website, which is simplesteps.biz, thesimplesteps.biz, and invest in making your business a remarkable one.
Yes. Show them the screen, Kim. With the next slide. Yes, that one. Yep, that's the page you've got to get to, and click on the purchase link. So thank you for letting us share what the Simple Steps for Business program is all about, and I think the time has come to sum up the 3 points again. So just to remind you once more that first, a business can't function without profit. Second, profit and cash are not the same thing at all. And on a daily, weekly basis, your focus must be on cash first and profit second. And Amanda and her hotel taught us that you're not a bank. If you don't get paid on reasonable terms, you can't run your business. If you want to be a bank, go and take a lesson from the Commonwealth Bank or something like that, but don't open your own business. So if you have to know what your break-even point is. And third, saying no is the most powerful business management tool ever. So what we'd like to leave you with is,
firstly, to build a remarkable business, you need to have fun, you need to have time, you need to have money. That means you must be on top of the finances to build a remarkable business. You just can't avoid it. That's the bad news, I guess.
But the good news is it's actually not as scary as you might believe. the basics of financial management are really quite manageable, and you can get a handle on your finances as well as any other business owner out there. It just takes for you to make the decision, to make it important enough, and to get the support or the tools you need to make it happen. So here's the last resource for tonight. The whole article that this webinar is based on is available on the resources page that we've mentioned before as well, the tiny.cc/finance step 1 page. And so the whole article is available there together with the other resources, and you can also get another copy of the worksheet for this webinar on that page as well. So
basically,
yes.
If you enjoyed the webinar, you ain't seen nothing yet. It's just really the tip of the iceberg. We have so much great stuff for you, and we really want to share it with you. Remember the 10 times guarantee. We actually really hope you'll sign up right now. And as we say, your business and your life won't be the same again. We actually guarantee it, I guess.
Excuse me. Look, thanks for your time tonight and your participation, and if you have any other questions, you can of course email us at help@thesimplesteps.biz. That's up on the screen there. That's it. Goodbye from me. Speak soon.
And look, a really big thanks from me as well, and goodbye. Thanks for being on our call, and I look forward to the next Simple Steps for Business program, or whenever we next meet. Thanks again, guys. Bye-bye.